What is happening? What is up, guys? It is the XRP Alpha. I wanted to do a quick educational video for you today. Here, I bought Blockchain Backers course. It does cost money, but it is totally worth it. He has a ton of content on here. He keeps you up to date. He keeps adding new videos too as the market progresses. He also called Bitcoin's top. He got out of his whole Bitcoin position at the top. But this is just one video that I wanted to go over with you using these Fibonacci retracements because they are huge and it's everywhere. Not only in charting, in life, the Fibonacci retracement tool it's crazy. But I wanted to kind of just go over this video with you guys so you guys can do it yourselves. This is the easiest way. I could have made one myself, but he does such a good job of explaining it. Anyways, here you go. Let's jump right in.
Section we're going to be talking about the Fibonacci retracement tool, which is my favorite tool. Anybody who has watched my YouTube channel knows this is the one that I always pull out. If I don't know what's going on a chart, the first thing I'm going to do is go grab that Fibonacci retracement tool to see if I can figure something out with it. So the Fibonacci tool can be found over here on the left side, right here where this pitchfork is. You can click on here and come down to Fib retracement, and this is going to give us our Fibonacci retracement tool. And it is such an incredibly powerful tool. I use it daily. I use it all the time. Now, what a Fibonacci retracement tool is, it's telling you how much of retracement an asset has made after a large move. So, for example, I'll take it off the screen right now. We're just going to draw on this chart. So let's say that an asset starts to go parabolic and the price really fires up and then it crashes down, right? Well, typically it's not just going to keep crashing down all the way to the ground. Usually it's going to have some type of bounces that happen along the way before it gets all the way down to the bottom, right? It usually doesn't just go in a straight line, but it has bounces that get it all the way down to the bottom. And what we need to figure out is, let's say that we are in an asset and this asset is flying all the way up to the top. We don't really know when to sell it. We just hold on to it, and then suddenly it crashes terribly. And you're just like, oh my goodness, what do I do? Well, sometimes people will get emotional, they'll get scared, and they'll just sell it as it's going down, thinking that it is going to actually go straight down. But since assets don't usually just go straight down, they'll actually bounce. We try to figure out, well, how can I get out of this asset? How can I sell this thing and still get the most for it? And that's where we'll try to do a Fibonacci retracement on an actual chart. And we'll do something like this. We'll measure how big this move was. So when the crash actually took place, we'll say, let's measure this crash that we had, and we'll say, where are the retracement levels? And so a Fibonacci retracement is telling us what percentage of the crash has it retraced. So if it only retraces to this line right here, that means it's only retraced 23.6% of the entire crash. However, if we come way up here, then, well, we've retraced 50% of this entire crash. And if we get up here, we've retraced 61.8%. And if we get all the way up here, we've gone to 78.6. Now, there's something else that I include on my Fibonacci retracement chart, and that is a level that is not included in a standard chart. So what you can do is you can double click on any line on this Fibonacci retracement and I like to go down here to the bottom right corner, and there's going to be a number here, like, 5 point whatever it is. And I like to put in 0.702. This is a very important level, and let me show you why. You'll hit the check mark, hit OK, and now you have a new level included in your Fibonacci retracement of 0.702. So that's a 70.2% retracement level. I have noticed in crypto markets and many markets that these retracements tend to go right to about that line. I think it's a little ironic too right there if I actually just drew that retracement by hand without even looking at that, and look where it went to, 70.2%. I've seen this so many times. It's such a critical level that while we're going through the remainder of this course, I will be referencing back to this 0.702 many times. So 70.2, right? So we get our big crash and then we retrace. And a lot of times what you can do in these circumstances, if you're a day trader, so for me, right, I'm not really a day trader, but I do have like a plan for when this market does go parabolic and how I plan to escape it. I have two different strategies on my escape plan, and we'll talk more about those later, or my exit plan. That's going to be, trying to time the top. And then if for some reason I can't get the actual top, well, where's the next place I'm going to try to get out at? well, that next place is going to be right there. That's how I plan to escape this market and avoid the entire crash that comes afterwards. So these retracement tools are important for helping us figure out where does the market retrace to. You don't want to be the person selling out of your assets down here in fear. You want to tough it out, ride through it, and get back to a good price level to be able to sell and escape. And this tool helps give us that ability to figure out where that could possibly be. So typically in a retracement, the most common areas that get retraced to are going to be 50%, 61.8%, 70.2%, and 78.6%. So when a big crash comes, really the worst thing you can do for yourself is be selling out down here. But you want to wait till you at least get a retrace bounce or a Fibonacci retracement bounce back up into these levels, and then you can kind of start making decisions, and you can start kind of, doing what I talked about in that indicators, right? In those indicators, right? Figuring out how much risk to reward you want to make, right? So it's like, okay, I want to get out of this market right here. I'm going to go ahead and sell. But if this market goes up higher than all of these retracement levels, then, well, it's not following the plan that I expected. So I sell out of my position right here. I put my stop loss right here above this 0.786. And then if it goes beyond that, well, then it means we're doing more than just a retracement. Maybe this market is actually not going to end up crashing, and maybe this market is actually going to continue going up. So that's where this tool becomes really useful, right? We can figure out if we're going to be just retracing and continuing to crash, or we can at least set a rule and say, hey, it's retraced to here. I can sell out of my position. If for some reason it goes higher, I know where I can put my stop loss and say, you know what, it's not doing what I'm expecting, and I can buy my position back.
So real quick, I want to jump over into the Bitcoin chart and show you exactly what he was talking about right there. Let's see, I might have to delete some of the stuff. It might be a messy chart. Let's click auto. So like we've been waiting for, Bitcoin didn't get much of a retracement after this. It pretty much just went straight down. Have a nice accumulation zone here, expecting that retracement back up to 50,000. Golden pocket 702, 618 right in here. So what I will be doing is getting rid of my positions once we get back up to that $50,000 range. If I would guess, we would turn back around and come back down and flatten out before the next bull run. But if it keeps going and gets above the 718, the 702 up here, if you get into these levels, then I would be buying back in at 55,000, because we will most likely continue higher, and enough time has gone by where we could see something like that. I still think that there's higher probability of us bouncing off, coming back down, kind of like we did back here. It's a perfect, look at this. If you go back into the Fibonacci on the previous bull run, all the way down, bottoming out period, what do we do? Go up just past the 618 and then rolled all the way back down. Can you imagine getting out, buying down here at the bottom, riding it up to these retracement levels, and then getting out and then having it come all the way back down and reloading again, more than doubling your position right before the next cycle? That's how this is done, guys. Top to bottom, we ride up into these retracements, probably double back over, and I'll be getting back in at these lower levels and then ride it for the next bull cycle. Anyways, let's jump back over, keep going over some of these.
Back here, because it's not crashing, at least I don't think it's crashing, so it's not following my rules. So the Fibonacci gives us the ability to set a rule on when we want to sell and when we want to buy. So I use this all the time. But now let me go ahead and show you on these charts how often this Fibonacci comes into play and how often that 702 retracement comes into play, and where you could have used that in these market cycles to exit. So first we'll start with Bitcoin right here. We'll head back to 2013, and then we'll work our way all the way up to here to show you the different times that the Fibonacci's were in play. So we'll look at this entire crash that took place in Bitcoin from 2013
we just looked at this
to 2015. And this entire crash, here we go, we'll use this tool right here, the price range.
85%?
This entire crash went down 87%. Is there anything you could have done after this parabolic move to the top to avoid that, right? Well, a lot of people probably were panic selling right down in here after the price had already crashed from $1,100 all the way down to $400. A lot of people were panic selling down here. But what would have been the smart play? Smart play would have been to do a Fibonacci retracement on the crash and say, you know what, my rule is it has to retrace before I get out.
This isn't the
And
one
there
we
we
looked
go.
at. This
You
is
can see
earlier.
right
This is
there.
2011.
Now, when this market did retrace,
And it did it on that one too. Not crazy.
Retracement that it did. It
Into the
retraced
702.
precisely.
Dang, 786.
Perfect, right on the nail to the point
It works, you guys.
786. So what would have happened if you went ahead and said, I am going to sell out when this thing gets back up to this 0.702 level, right? You would have said, hey, okay, I'm going to go ahead and enter in my short position, which just means I'm going to sell. Obviously, there's people who use leverage and they do a lot of different trading styles, but for the most part, when I'm saying a short position, just means sell. So I'm going to sell out of my Bitcoin right here when it retraces to this 0.702 level, and I'm going to expect that we're going to set new lows beyond here. So it retraces all the way up to 0.702. I set my stop loss and have a rule that if it goes beyond the 0.786 and it gets up above the 0.786, I cancel that sell and I will go ahead and buy back my Bitcoin. In this circumstance, you can see perfectly that it did end up continuing to crash, and you would have been able to avoid a large percentage of the losses, right? You can see that this price still crashed 83-84% from that level. You could have escaped, and I think most people would be happy with themselves if they were going to ride this whole thing up and they sold it right here. I think most people would be pretty satisfied with that type of sell. So
yeah,
you
I'd
see
say so.
that the 0.786 was respected right there. If we head over to the most recent crash,
Now, this
that
is the
happened
one we
in
went over.
Bitcoin here in 2017, 18, and 19, you can see the same thing up here, right? So we'll look at this initial crash that we have over here on Bitcoin, and let me go ahead and add the Fibonacci retracement. So the price crashed from right here at about $20,000 all the way down to $11,000. And where did the price retrace to? The price
702.
retraced right to the 0.702
Golden
Fibonacci
pocket, baby.
retracement level, in which you could have done the exact same thing. You could have made your sell order right there, placed your stop loss so that it's not following your rules and you're going to give up on that selling idea if it crosses above this level, and then you have your target to go down to new lows. That is how simple the Fibonacci retracement works. So anytime you see a big dramatic move to the downside, you can always set up your Fibonacci retracements and say, wow, that was ugly. You know what? This price just lost 40% during this move right here. Let's see how much it was. It was 43%. You know what? I'm going to bet that was the top of Bitcoin. I'm going to get out when this thing actually retraces. I'll set my rules so that if it goes higher than I expect, then maybe I'm wrong. But you know what? A lot of times it works out perfectly. So the Fibonacci retracement tool to figure out where retracements go to before the next leg of a crash occurs can be incredibly useful here on these charts, especially when we zoom back in time and we just kind of even look at these ones right here. Like, let's zoom in on this one. So here on Bitcoin back in September of 2017, you can see that there was a crash right here where the price went from about $5,000 down to $4,000, retraced up to 4,700, and then crashed all the way down to just below $3,000. So this total crash that took place in Bitcoin ended up being 40%. But is there any way that you could have avoided this whole leg right here? So let me kind of highlight it with an ellipse and say, is there any way you could have avoided this one right here, or at least missed a bulk of the move and bought into the extreme fear way down here? What you could have done is just put a Fibonacci retracement on top of it, right here from the very top in the initial crash. You can see the initial crash occurred right here. Where did the price retrace to? Retrace to the 0.702 and then continue the leg down. So Fibonacci show up on these charts.
So as you guys can see, it happens everywhere all the time in these charts. It's one of the most reliable things. Obviously you want coinciding indicators, you want different things, support, resistance levels, but these are the things we look for. And you guys, if you don't follow Blockchain Backer, you should go follow him on YouTube. If you haven't signed up for his free not free course, but for his course, it's really cheap for all the information you get in there. Like, he has a ton of stuff and he keeps adding more. It's totally worth the money you spend. He does a very, very good job. It's easy guy to understand when he's going through. His stuff's pretty complex at times, and he does a really good job of just navigating and showing you exactly how to use these tools and indicators. But anyways, guys, I hope you like that. Give you kind of an idea of what I'm doing when I'm doing the charting, and I'm getting better and better, watching more and more people and picking up new little things and nuances, and I will keep you guys posted as I learn more and more. Hopefully you guys can come along for that ride with me and become a XRP Alpha. Have a good day, guys. Peace out.